But on the question of decreasing trading volumes, NSE MD and CEO Ashish Chauhan said that NSE will do as SEBI asks. His comments, of course, came right before the consultation paper was put out. Listen in.
We are a regulator first. And the second is whatever regulator tells us we have to do. So put together, whatever they say, we will accept.
But NSE is also a profit-making.
Only as a byproduct. Profit is not the motive of running any exchange or any MII.
Okay, Amit Khurana, who looks at all of these pockets very, very closely, head of equities at Daulat Capital Johnson, to tell us what he thinks could the big picture potential impact be of a move or a proposal like this. Amit, not a move, a proposal. Neeraj here, good morning. Thanks for joining in. A proposal as yet, but you guys are big on the derivative space as well. What do you think is the potential impact if most, if not all, of these proposals get accepted and put into practice?
Yeah, hi. Thanks, Neeraj. I think there are two broader sort of philosophy points that one can put in. One, they are essentially targeting the weeklies and they are targeting the option segment. The second important part is essentially this is the starting point, which I believe is moving from sachetization of options market, the F&O market, towards institutionalizing it, wherein the regulator essentially has a philosophy, and rightly so, that the retail investors having a limited understanding of the options market and the risks that they are taking are being too exposed, and especially the post-COVID period when it went through a significant boom led by technology infrastructure, enablers from the intermediaries like brokers, and whole lot of other social media, which led to a significant increase in the activity. I think it's about time that it is managed well and the risks are highlighted. The impact will obviously be that the weekly product will have a significant dent, and brokerages which are exposed to the retail side of the businesses will take a significant amount of impact on that. Obviously, exchanges will also have a lower fee, lower revenue, and so will the STT get impacted from the government perspective. So all in all, I think the objective here is less from the revenue side of it, but more from the risk management and managing the systemic level issues, which can essentially risk the entire system at any point of time. So might as well control it when things can be understood better, rather than being as a reactive regulator.
Now, Amit, you guys have a significant exposure to the foreign insti trader using derivatives, presumably at your end too. How high was this volume on these multiple weekly segments available, and could it deter or could it be a dampener for an institutional participant as well if the number of weeklies are cut down?
Well, difficult to decipher as to how much will it impact, because most of the insti was more monthly rather than weekly.
Okay.
Weekly was a more sachetized product for the retail segment because the capital outlay was relatively lower. Most of the insti and especially the FPI books or even the domestic R books move more on the monthly side. Liquidity impact, it's difficult to decipher right now, because eventually as one leg gets impacted, there will be some impact, but whether it will lead to a significant increase in the spreads, I don't think so. They will eventually get normalized, but we have to see how it evolves.